Today, let's quickly discuss QE. Yesterday or the day before, or whatever video, I indicated that QE may be back, and I want to tell you why. And everyone's now debating, do we have QE? And the Fed saying they are not doing QE. So what's going on? First, we had a 3-year Treasury auction, and you can see here we had $20.4 billion bought by the SOMA account. And then the next day, we had a 10-year auction, and 14.8 billion were bought by the SOMA account. So what's the SOMA account? The SOMA account is the System Open Market Account. And when you look down here at the number 2 there, it says changes in SOMA holdings can indicate whether the Fed is expanding, buying more treasuries, or shrinking, selling, or letting the bonds mature on its balance sheet. So basically, SOMA is the account that the Fed uses when it's either going to buy securities for the balance sheet. So that would indicate that they are doing QE. But I went to DeepSeek and I said, if the Fed is buying more securities from the interest paid from the Fed balance sheet, the $6.8 billion, is that considered QE? And it says, no, it's not considered quantitative easing in the traditional sense. And here's why. QE involves the Fed creating new reserves, money, i.e. printing money, to buy treasury or other assets and expanding its balance sheet. Purchases with interest income or earnings from existing holdings, payments, it's not new money, it's simply reinvesting proceeds. But then when you get down to the bottom here, and oh, by the way, policy intent is QE is an active stimulus tool to lower long-term rates and boost the economy. What gets me down here, though, at the bottom is that if the Fed explicitly announces that it's using interest income to actively support the markets, okay? So a lot of words there. What does it all mean? So one, the Fed is buying through the SOMA account and increasing the balance sheet. They are using the interest. So the traditional definition of QE is not there. But notice the Fed isn't buying bonds from the banks. What they're buying is they're buying along with the banks when we have a new issuance, all right? And so that last line on the previous thing was to support the securities. And I would say that because we are buying on the auctions, we are supporting the securities, whether the Fed explicitly tells us that or not. So there you go. What do you think? So you got the traditional QE, you got QE from interest, and now is it QE because we're participating in the auctions? Now, for me, I think this is a form of QE, and that this is, what we're going to run into. Now, we've been talking a lot that, ever since Liberation Day, that the asset managers are now moving out of the U.S. to some degree. Again, it's up to you, 10, 20, 30%. And this is going to take 3, 4, 5 years, okay? But the other thing that's happening and is going to really kick in this year, because we're really, we have $6 trillion we have to raise over the next 6 months. I think a total of, between 9.75 and 10.75. We don't know if we're going to get the tax cuts in. I think I'm now targeting September. We're going to find out. And those tax cuts will increase our deficit by $2.5 trillion each year for the next 2 years, total of $5 trillion. Now, here's the deal. How does this happen that all these other countries buy our treasuries, right? Well, guess what? When they trade with us, they're sending us their goods. So whether you're Vietnam, whether you're Taiwan, which has a $74 billion deficit, or you're Europe, which has close to 200 billion, somewhere around there, this goes on every year. So they're sending us goods and we send them money, okay? Cash, dollars. And now they have those dollars. What are they going to do with them? So, yes, they invest and so forth, but they buy our securities. And we're talking about our treasuries, our CMBS, and our corporate bonds, all right? We just saw that with the Taiwan life insurers. They're huge on corporate bonds and U.S. treasuries. So now that the tariffs are coming in place, I would think that we're going to see less goods coming to America, whatever amount that you think, and we're going to be sending less money back to them. So they're going to have less money to buy new treasury position. They have their existing positions, and they could roll them over. But we also know they're moving away from us. They're buying gold, the yen, the Taiwan dollar, the euro. So the question is will the tariffs slow down the sales to America so much that there's a material difference in the money we give to these countries, and thereby they buy materially less of our securities? And so with the tariffs on, I'm not surprised that we are now participating in our auction. Now, supposedly we're still doing QT at $5 billion a month, but in 2 days, we just went up over $35 billion. And by the way, on Thursday, we have the 30-year coming. So what's going to happen there? We can see that the Fed is not going to cut, and maybe not even this year. And so anybody who follows this channel for any time knows that I believe we just had the first of 3 waves of inflation. We're going to go with the second one, which will be much higher, and the third one will be much higher than that, okay? This is going to be a process of 10, 15 years, but, that's down the road. So what's going on? Is the Fed preparing for less money? These are not stupid people up there. They know what the tariffs are going to do. Notice all the empty containers, TEUs, coming from China. They're down, I think, 40 to 60%. You see different numbers. Well, that's less money. That's going to be less money coming back to us to buy our securities. So is this the beginning of us starting? This will be the first type of QE before we go into full-blown QE? What do you think? Like and follow, and tell me in the comments. Thank you for watching.